In this video, I want to explain how I win on every single trade that I take. It might not be a monetary win, and I don't have 100% accuracy. However, I position myself to win every single trade that I take. And in this video, I want to break down some actual trading examples and some psychology so everybody watching this can win on every single trade they take, avoid taking big losing trades, and start to become a better trader. So before I take any single trade, and I want everybody to keep an open mind and do this themselves and be honest with yourself. If you're lying to yourself, you're not doing yourself any service. So when I take a trade, I am always putting myself in the position to win, and how I want to position myself that it's a win-win, that even if I do lose, I still consider it a win because number one, I'm learning something from it, and number two, my risk is very tight, so my losses do not hurt my account. So no matter what, I'm always taking a trade, and I will view it as a win, especially after many years of losing when I first started out trading. Before we go any further, I recommend everybody watching this to follow me on my Instagram at amertitrade. This is my only account. I never follow you. I never message you. The link will be in the description below. It's a really good resource that I post daily trading recaps, some trading setups, and just overall good trading tips and tricks that I guarantee you're not going to find anywhere else, such as, stop losses, indicators, demand, supply, etc., etc. If you're not following it, you're really missing out. So the first thing you have to ask yourself is, do you have a fully structured plan? In my opinion, you do not have a valid reason to open up any single trade, and you don't have a reason to click that buy button on your keyboard if you do not have a fully structured plan. Now you need to ask yourself, what is a structured plan? Number one, the most important, it's the core, it's the solid foundation to a trade, is you need confirmation. What is your reason for entering? What is this setup I'm taking? I am buying a fake out low at daybreak, or I am shorting a high at daybreak. What is your reason for entering that trade? This is the most important, and I think this is what a lot of traders lack, is they do not enter the market with a solid reason. You also need to have a valid stop loss. It blows my mind on how some traders enter the market so blindly that they do not implement the stop loss, and they come to me with a very large loss trying to figure out what they did wrong, but they did not properly manage their risk, and they never put their stop loss at an area on the chart where your analysis is proven wrong or incorrect. It should not be based off of a percent amount or a random point on the chart. It should be based on a dollar amount that's fixed to the amount of risk that you could afford to lose, where your analysis is proven incorrect based off the chart. It's not just because we're down 200 bucks. It's not just because we're down 1%. It's where we are incorrect on the chart, and we correct our trading size to fit that risk so it corresponds with one another. And point number three to a valid structure plan, this is 50-50 because some people don't believe in targets. They want to let the market do its thing. And some people do believe in them. I'm on the fence of both. It depends on the trade you are looking to open. If you're looking to trend trade something, then I think having a target in mind is valid. If you're looking to scalp something, you kind of just want to go with the flows of the market, but you do want to have a valid area that the market can potentially reverse, and that's where your target should be. This is what a fully structured plan is. And if you don't have all three, you do not have a valid reason for entering. If you do not have a structured plan, and let's go over a trading example. So here's an example where the market started rallying up, and let's just say trader number one, who is a failing trader, who is struggling, simply buys the market long when we start breaking out over here at my oval. This trade works out for him. He makes money on this setup. But his reason for entering this trade was he didn't have one. The only reason why he entered was because the market was moving up and he thought it was going to go higher. If you think, and that's your confirmation for entering, I thought the market was going to go down, that's not valid, and you are better off not taking a trade. Because let's just say you make money on this trade, just off of luck, it works out, we get continuation to the upside, we bought the stock, and it starts to rise. Well, what if you do the same thing a few days later, you buy a breakout for no reason other than the market's moving high with higher highs and higher lows, and then 10 minutes after you get dumped on and you take a big losing trade because you had no valid reason for entering here, and you sit in the market with regret, and it affects your future trading decisions because you just realized you took a big loss because you didn't have a valid trading plan. So if you don't have a fully structured plan, you need to stop trading. You're better off at a casino and you will never become consistent. Believe me, if you don't have a plan, you will struggle, and don't try to figure out what you're doing wrong because the first step is not having a fully structured plan. Now, before we go any further, I want you all to accept the 3 outcomes that are going to happen when you take a trade. There's not 4, there's only 3. Number 1, you're going to have a win. Number 2, you're going to have a break-even trade. 3, you're going to have a small loss. In your vocabulary, there should be no such thing as a large loss. Small losses will provide the greatest lessons. We could afford to take them, and we will learn something out of the market. A break-even trade is good because we got real skin in the game, and we collected data, and we learned something without even losing money. Not every monetary loss is an actual loss, and this is how you're going to position yourself to win. So if I had a structured plan, I'm either going to make money on the setup or I'm going to lose money. Now, I don't care of the either outcome. Yes, it sucks to lose. Nobody wants to lose. And yes, everybody wants to be correct and everybody wants to win all the time. That's just human nature. But now I need to ask myself, is if I won or if I lost, did I follow my plan? Now, if I took a losing trade and I did not follow my plan, then it is a bad trade. However, if I took a losing trade and I followed my plan, I managed my risk, then I look at it as a winning trade because, like I said earlier, my losing trades are very, very small because I don't have a big loss in my vocabulary. If I had a plan, then I accept my risk before I enter that setup. And I'm accepting that risk to be very, very small that I don't let a loss go so far out of control that it's such a big one and it's going to destroy my account. Yes, when I first started, that was the case. However, after taking those big losses in my first 2 years, that's not the case anymore because I've experienced big losses. So I don't look at a losing trade that I lost money on as a bad setup. As long as I had a plan, I followed my plan, and I managed my risk, I view that as a winning trade. And that's how I put myself in the position that even if I lose money, I still consider it a winning trade if I followed my edge, if I followed my system, I managed my risk, and I stuck with my plan. For example, here's a losing trade that I took the previous week on the S&P 500 where I said my line in the sand is near this 4120 level. Buyers are trying to buy. If we see aggression step in, this might be a good play to the long side, targeting the supply zones above. It was bouncing off the demand. We were putting in a higher low. We were spotting buyers on the tape. And then I said I'm going to try longs here at 4121. When the market looked just like this down here, we spotted buyers watching the time and sales in the level 2, aka the tape, and I was trying it long. The market's in a do or die right here, targeting this little previous high over here. Well, guess what happened? The market rallied. We missed my target by about 2 ticks, and then we got a dump down, and I stopped out of this position at 4119 for a 2-point loss as I did not like how the market was moving back into the range, how weak the buyers were, and how bears were stepping in. So I got a 4121 entry, and I stopped out of this trade for a 4119 loss. That's a 2-point loss on the S&P 500. That is a very, very small loss compared to my wins. So I had a plan, I had a confirmation, I had a stop loss, and I had a target. It was a losing trade, but I followed that plan, and I consider that a winning trade even though I lost 2 points and lost money on that setup. A lot of traders cannot accept the loss after they lose. They say, oh, I am a bad trader. I suck at this. My account keeps going down. The best losers will win and the best winners will lose. If you cannot accept the loss, you have a lot of work you need to fix mentally before you could go on that path to becoming profitable. If you get upset, if you get angry, or you get frustrated after a loss, you will never become a winner. The only time you could ever be mad if you take a losing trade is if you did not follow your plan. I always ask myself, did I follow that plan? If I did not, then it's a bad trade. And yes, you need to get frustrated at yourself and you need to become more disciplined to always follow your plan if you want to become a profitable trader. This is a trader who knows his mistakes. He got overconfident. He could have taken a small profit. And if he did not follow his plan, he let his emotions get involved. He kept adding to a losing trade because he wanted the market to go in his favor to get a nice return, and it went horribly wrong. He had 2 small red days, so this is very good. A $50 loss and a $44 loss. Excellent. I love seeing small losses, and I love seeing people who are okay with them. And this is why win rates are irrelevant. Then on Wednesday, he had a $1,000 loss. So now he's taken 3 trades to start the week. 2 of them were losers. 1 of them was a winner, but his 2 losers were only $100, and his winner was $1,000. Excellent. Then on Thursday, he takes a $5,000 loss because he did not follow his plan. He kept adding to a losing trade. He let his emotions get involved, and he did not accept the risk before clicking that buy button before that trade was put on. If you take a large loss like this, it either has to do with your emotions and you let them get the best of you, you did not follow your plan, you're gambling, you don't have an edge or a system, or you're just too attached to the money. You see you're down $1,000, and instead of accepting that loss according to your plan, you say, no, this thing's going to reverse and we're going to start moving in my favor. And sooner than later, your $1,000 loss turns into a $5,000 loss just like this, and your account just got destroyed because you did not listen to my advice. And here's another member, Unreal Month, been at it for 2 years. He's never had a $1,000 month, hit that goal, and then doubled it, focusing on the process. The best traders will focus on the process, they'll follow their plan, and they will become a very good loser. Now, I will critique this because there is one error in this. He had an excellent month, very good green days. However, he had one day where it was a negative $550 loss, and I don't see anywhere on this calendar that he had at least a $1,000 winner or at least a $500 winner on a single day. So this day he had a very large loss. And if you have multiple days like this, it's going to be very hard to get out of that hole if your winners are not taking care of themselves. So on this chart, that if you did take a profitable trade and you followed your plan and you won on it, those winners, if we go down the list of green right here, will take care of the losing trades if you manage your risk properly. And this is how you structure yourself to put yourself in the position to win on every single trade that you take. So I'm going to leave you all off on that, and seriously be honest with yourself. Now that you understand this advice, moving forward, if you take a losing trade, make sure you follow your plan and you manage your risk. If you do that, your losses should be small, and you have to view that as a winning trade. If you have that winning mentality, you will slowly start to become a better trader, and your winning trades, the ones you're profitable on, will take care of those losing trades that you lost a monetary amount on. So I'm going to end it on that note. Comment if you have any questions, drop a like on this video, and definitely check out the links in the description below. But I'm ending it. Peace out.